Hey guys, welcome back to another episode. In this video we will be going through our very simple, yet profitable 5-minute stochastic scalping trading strategy. If you want more videos more often, please smash the like button, subscribe, and turn on the notifications bell, and share this video across your WhatsApp, Facebook accounts, or Twitter to show your support. A very important point before we start. Everything we discuss in this video can be used for currency trading, stock trading, and crypto, because price action stays relatively consistent across different assets, so we're going to go very in-depth in this video. In this video, you will learn a scalping strategy that will allow you to scalp the Forex market, indices, stock market, and cryptocurrency. For this particular trading strategy, the time frame that should be used is the 5-minute chart. However, it can also work well as a scalping strategy on the 1-minute and 15-minute timeframes. The stochastic scalping strategy will allow traders to make incremental profits over short time frames. Over time, these small profits can add up to substantial amounts and can prove to be very lucrative for traders. Is scalping a suitable strategy for you? Scalping is a strategy that involves trying to profit from small changes in an asset's price. Smaller moves happen more frequently than larger ones, even in relatively calm markets. This means that there are many small movements from which a scalper can benefit. Scalpers can place up to a few hundred trades in a single day, seeking small profits. Because scalpers basically have to be glued to the charts, it is best suited for those who can spend several hours of undivided attention to their trading. It requires intense focus and quick thinking to be successful. Not everyone can handle such fast and demanding trading. It is not for those looking to make big wins all the time, but rather for those who like raking in small profits over the long run to make an overall profit. Some things to consider if you decide to scalp with 5-minute stochastic indicator. First, trade only the most liquid market. In Forex market, pairs such as the British pounds United States dollar offer the tightest spreads because they tend to have the highest trading volume. You want your spreads to be as tight as possible since you will be entering the market frequently. Second, trade only during the busiest times of the day. As a scalper, you only want to trade the most liquid markets. Even though the Forex markets are trading for 24 hours a day, the volume is not the same at all times of the day. Usually, when London opens at around 3 a.m. Eastern Standard Time, volume picks up as London is the major trading center for Forex trading. At 8 a.m. Eastern Standard Time, New York opens and adds to the volume being traded. Thus, when two of the major Forex centers are trading, this is usually the best time for liquidity. Third, make sure to account for the spread. Because you enter the market frequently, spreads will be a big factor in your overall profit. As each trade carries transaction costs, scalping can result in more costs than profits. That's like working for an hour in a job that pays $5 per hour and then going out and buying a $6 caramel ribbon crunch frappuccino. Fourth, try focusing on one pair first. Scalping is very intense, and if you can put all your energy in one pair, you'll have a better chance at being successful. Trying to scalp multiple pairs simultaneously as a noob will almost suicidal. If you start to get accustomed to the pace of things, then you can start by adding on another pair and see how it works for you. Fifth, make sure you follow good money management. This goes for any type of trading, but since you are making so many trades within a day, it is especially important that you are sticking to risk management practices. Sixth, major news reports can throw you off. Because of slip page and high volatility, trading around highly anticipated news reports can be very dangerous. It sucks when you unexpectedly see price jump in the opposite direction of your trade because of a news report. So, be prepared and know what's coming out by checking out the economic calendar. Chart setup. We will be using MetaTrader 4 indicators for this setup. Pick the right settings on your moving average. So what is the best moving average for your trading? The answer is depend on your goal with the moving average indicator. In this strategy, we use 150 and 50 exponential moving average or EMA combination on the 5-minute chart to identify strong trends. I've included a template with the system that you can simply upload to your chart and it will automatically plot all these indicators perfectly on your charts, so there's nothing for you to worry about. Get the download link on the description. Pick the right settings on your stochastic oscillator. The stochastics oscillator tracks the evolution of buying and selling pressure, identifying cycle turns that alternate power between bulls and bears. Picking the best parameters. Choose the most effective variables for your trading style by deciding how much noise you're willing to accept with the data. Understand that whatever you choose, the more experience you have with the indicator will improve your recognition of reliable signals. In this strategy, we use the stochastic with the following parameters. Slowing 5%, K period 5, and %D period 5. Identify overbought and oversold levels. An overbought level is indicated when the stochastic reading is above 70. Readings below 30 indicate oversold conditions in the market. A sell signal is generated when the oscillator reading goes above the 70 level and then returns to readings below 70. Conversely, a buy signal is indicated when the oscillator moves below 30 and then back above 30. Overbought and oversold levels mean that the security's price is near the top or bottom, respectively, of its trading range for the specified time period. Now, it's time to reveal the actual trading strategy. The buy trading strategy. A clear buy signal is if the fast orange line of the stochastic indicator crosses the slow blue line to the upside from inside the oversold region or below 30 level on the stochastic. It should break and remain above the oversold region. Once this condition has been satisfied, you should proceed to buy. Another buy signal is the existence of bullish pressure. This may be evidenced by the 50 EMA or orange line crossing the blue line of the 150 EMA to the upside. You should place your stop loss about 2 pips below the support level. When to sell. The following scenarios are indicators that you should sell. If the orange line of the stochastic crosses the blue line to the downside and from inside the area above the 70 level, it should break and remain below the 70 level on the stochastic. Another sell indicator is if the 50 EMA or orange line goes across the blue line of the 150 EMA to the downside. This indicates that there is selling pressure in the market. For a short trade, you should place your stop loss 2 pips above the resistance. The strategy for exiting a trade. When you're planning your exit strategy, you'll need to consider your risk-reward ratio. This shows you how much capital you'd be willing to lose compared to the profit you would earn on the trade. The most common risk-reward ratios are 1:2 or 1:3, as 1:1 is considered too risky. Say your potential loss on a trade is $200 and your maximum gain is $600, then your risk-reward ratio is 1:3. This means that over the course of 10 trades, you could have made $400 despite only being right 30% of the time. Here are other examples of the 5-minute stochastic scalping trading strategy. Because scalpers basically have to be glued to the charts, it is best suited for those who can spend several hours of undivided attention to their trading. It requires intense focus and quick thinking to be successful. As always, if you learned something new, or if you want more videos more often, make sure you subscribe, click the notification bell, and share this video across your WhatsApp, Facebook accounts, or Twitter to show your support. See you next time.